Take a look at your market news now. Asian markets started along on Thursday after New York equities retreated from record highs with weak economic data around the world offsetting a forecast-beating earnings season. Now, while the mood and trading floors remains broadly positive after a blockbuster start to the year, there are lingering concerns that growth in most parts of the world is well off the pace of the United States. Tokyo's Nikkei gained 0.5% to 22,307 points, while the Hang Seng fell 0.7% to 29,609 points, and the Shanghai Composite dropped off 2.4% at close to end at 3,123 points. Previous session with a record high, and the Nasdaq edged lower after reaching an all-time high earlier in the day. While investors waited for more earnings reports, the Dow Jones Industrial Average lost almost 60 points as it closed the day at 26,597 points. The S&P 500 was down almost 0.25% at 2,927 points, and the Nasdaq Composite slipped 0.23% to 8,102 points. Let's go now to the Johannesburg Stock Exchange. My colleague Arabile Gumaide is standing by with more of your market news. Arabile, very good afternoon to you. What's happening in the markets?
Yeah, good afternoon, Nzinga. Well, that market picture not actually looking as good as one would have hoped. It certainly has followed through from what has happened out in Asia. It seems to have been a little bit of a mixed trading session, particularly this morning. This has all filtered through from those German numbers, as you mentioned a little bit earlier on as well. So a few feelings about the general growth sentiment in the globe not looking too good. And also, equities out in the United States falling from their record highs just a touch, but still, of course, in that record territory. So not really too much to write home about on that front. Around 78% of the S&P 500's listed companies, or those companies listed on the S&P 500, have reported better than expected quarterly profits already. Of those, of course, that have reported. So it's a fairly good number out on that front. We'll continue to see how things fare as well. Out in Europe, things are a little bit mixed as well. Let's check in on those numbers and we'll unpack the data in just a bit. Well, that market picture, as you can tell, a lot of red across the board and across the sentiment. There's some negativity continually just filtering through. Maybe it's just profit taking, but let's get the word then from Owen Nkomo from Nkunzi Wealth. Owen, thank you so much for the time, but 0.25% down. Yes, we are around 15% up, I think, for the year thus far for the JSE, considering that we did have a fairly low base. Perhaps we wanted to test that 60,000 point mark before mid-year. Think you can still get there?
No, I think the potential is still there, especially if you look at the currency being weak, 14.52, trading back at 18.70 to the pound. I do think that there's room for that to happen if the rand continues to be weak. And obviously that depends on the factors that drive the currency. I do think 60,000 is definitely doable.
Yeah.
If you consider as well that the US markets are trading at all-time highs.
Yeah.
Yeah.
I mean, that's going to be quite a big deal, isn't it? And I'll touch on the rand in a moment. But the US continuously going as high as it is, those market sentiments are that things are okay when it comes to the markets, even though it may not necessarily be okay with the economy.
Yeah, look, I think the U.S. economy is not as bad as the rest of the world might be. There's a whole lot of sluggish growth around the globe, and America might start to be tapering off as well in terms of its growth. But I think it still has all the makings of an economy that can continue to do better than its competitors.
Sure.
So for that reason, I do expect that the U.S. markets will remain healthy until there's a major shock event in the system that says it's time to take profits off the table. This is the longest bull run we've had in a long time, actually, on global markets, and especially in the USA. And I don't think that we see those signs that will say the market should start coming off aggressively. For example, I think the biggest risk at the moment, in my view, has been taken off the table. The interest rates in America are not aggressively moving up. Will oil become the next issue that might potentially see markets start to correct? since oil is sitting where
Surely
it is.
It is then. It already seems like a big issue. US stockpiles have certainly gone to their highest, their record highs as well. That's just on the back of the fact that they've issued those Iranian sanctions and that the deadline comes through on the 2nd of May. Yes, it has been continued records with regards to the stockpiles in the United States, but is this them trying to say we can fill that gap in the market?
So what most of the OPEC members have started to do is to actually, try and work with the rest of the organization to reduce their production, their quotas. Some of them have no room to increase their quotas, so they can't increase any production. Saudi Arabia is about 500,000 barrels behind, or rather below their target. They're the only ones who might still have a little bit of room to increase their oil production, but everyone else is at a max. And I don't think that we'll see the oil price come back until we start to have a different conversation around production of oil. And if that doesn't happen anytime soon, I think the price of oil will go up from where it is at the moment.
So if we're to put a range to it now, you're saying $70 a barrel, between $70 and $80 a barrel for consistently this time of the year?
Yeah, and potentially to make it a tighter range, maybe without any change in the OPEC production numbers, you're looking at a 75 to 80 in my view.
Sure. Yeah. Okay, so the latter part of that figure then. Very quickly as well, touching on that Rand picture, 14 around 35 or so overnight. Now 14 Rand 50. The sentiment around that Rand is not necessarily that we are that weak, but really that the dollar just keeps on getting stronger.
Yes, it's the dollar. It's a dollar story there. It's not local issues that are driving the currency into weakness. Certainly, there is not much that's happening in South Africa economically, or at least in terms of decision making before the 8th of May, and it will take a long time for some of the key decisions to start being made after inauguration day on the 25th of May. I think most of the factors currently are exogenous factors that are affecting the currency. So we're trading alongside all the other emerging markets currencies, and there's no bigger story than the dollar strength, as you've mentioned.
Yeah. Okay. So very quickly, are you okay with us doing that inauguration at Loftus Stadium?
Well, one team, one dream, they say. I just hope it goes well. Eh?
Yeah, we'll see how things
He's after all the president of the country, man.
Yeah.
He's the president of the country. Nothing wrong with Loftus. The Lions have won a few games there recently, so I'm okay with that.
Okay, I get your sentiment. Let's talk about the broader elections themselves. That's bound to be quite significant now when we talk about how South Africa can actually move forward beyond that date. It doesn't feel like we've gotten any sort of change, any galvanization towards May 8th, but the hope is that after that, right, we'll get some sort of stimulus. Do you see any of that happening?
Look, man, I mean, we already have a stimulus package that's been announced by the president. We just need to find out how far that is going. And I've said it a few times before when I've been asked that, the conversion of those pledges he got last year when he was campaigning for that $100 billion, which he seems to have forgotten about, or at least he's not telling us now.
Somebody needs to find out. Yeah.
We need to find out where the president is with that number. But I think, in my view, if you talk about the South African politics at the moment and the elections, I just think South African politics is tired. Just tired. Nothing inspirational. It's very difficult, in our view, as business to kind of get a sense of where the country is going after the elections. And I think it's just going to stay more of the same. We're complaining year in, year out about unemployment, but I don't think the decisions that the country is making are decisions that are seriously driving entrepreneurs to create new jobs. I think these guys are prioritizing other things, which hopefully after this election, maybe the president starts taking a different stance and says, we've got a big problem with the GDP.
What could those other things be in a time where that unemployment figure is the main driver of South Africa's downward trend with regards to growth? Infrastructures that are low, and you can't continue to boost that up, otherwise it's spending, right? So where exactly? Where else?
So top of the list is corruption. We need to sort that out. It's an embarrassing thing where we're talking to international investors and they're mentioning that we're a country of inquiries because we're managing things in a not so kosher manner. We need to deal with corruption in institutions of government. We need to deal with corruption in corporate South Africa. Yeah. You've seen what happened at Steinhoff. You've seen what's happened at IO and all these other companies where things are not being managed properly. Deal with corruption. You start to deal with productivity issues. You start to deal with outputs. You start to deal with making people accountable for the budgets they get, whether it's company level or it's or it's national budget level, from a Ministry of Finance perspective. And then you want to start creating incentives for local and foreign investors to actually start deploying cash in the country and make South Africa an attractive investment destination. And then deal with crime as well. There's so much violent crime out there, and I think we potentially are not doing enough to deal with violent crime, to make sure that people are comfortable and the skills base in the country stays here at home and doesn't leave the country. And I think also you need to look at our labor laws. The labor laws must be revisited with the aim of making sure that it's easy to attract foreign skills, because at this stage we've got big shortages, for example, in the artisanal space, where we need to import those skills, but also teach our own people on those skills basis. And I think once you do that, and you just make sure that people are comfortable that if they bring money to South Africa, they can get more than 3% growth in the next several years.
They can only hope, right?
Yeah.
Very quickly, I have to touch on this one as I've mentioned, the PPI, final manufactured goods, coming in at 6.2% in March. The February figure was around 4.7%. Now seeing it at 6.2, that's a massive, massive jump.
Yeah, it is. It is a massive jump. The concerns around ESCOM, which is also something that needs to be fixed, electricity pricing, and the price of fuel as well, and a few other increases out there impacted this number in the last reading. And I think it potentially might be a precursor to what could happen to inflation if the price of oil stays where it is, Arabile.
We certainly hope not, because then that dissipates all hopes of a rate decrease at any point in time.
Yes. But I'm hoping for a more stable currency and for a more investor-friendly environment after the elections.
We'll see.
Yeah.
We can only hope. Owen, really appreciate your time. Always great having you on board. Of course, Owen Nkomo there from Nkunzi Wealth. As we said, that market picture, a little bit of red, but it is interesting to see what sentiment comes through right after that elections. May the 8th. It isn't that far away, right? It's 12 days away, as we make note of as well on the top of our screen. But do, of course, stay tuned to SABC News. We'll have all the details for you and all that election coverage.